Good morning, everybody. Welcome to My Trading Gameplan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. We are into another big economic release. The CPI data just hit, folks. We're going to take a look at that, and it was interesting to say the least, but interestingly enough, not the most important number we got this morning. So let's take a look here. CPI coming in a little bit hotter than expected. So remember, yesterday PPI was lower than expected, meaning at a negative 0.1% versus plus 0.3 as forecast. But here we're seeing CPI, which is the inflation that you out there and I feel when we go out and purchase goods. All right. So CPI stands for Consumer Price Index. Now we saw 4% or 0.4% increase versus a 0.3% expected. If you strip out food and energy, which is what core is, it came in at 0.3% versus plus 0.3% expected. So essentially in line, maybe a little bit hotter than expected. But this is where the big number was, the jobless claims. Now, normally jobless claims are not a big deal. All right. They come out every single week. We've been monitoring them. As I always tell you, above 250 is a warning sign. Above 300 means recession. Well, this week we saw jobless claims coming in at 263,000. That is a big jump. Estimates had put this number at 235,000. And that now brings us into a warning zone for the overall economy and the labor market. All right. So again, listen, one number, 1 week doesn't matter. But if we were to see this continue to grind higher and get to, let's say, 270 next week, 275 the week after, then you start to get into a trend of numbers that are creeping towards 300,000. Now, you'd think the market would look at the CPI data and say, hey, we're going to sell off on this. Well, initially we did see some selling. And then investors and the media started to spin this. And they said, wait a minute, 263,000 people filing for unemployment. This must mean we could get a 50 basis point rate cut at the meeting next week, the Fed meeting. Listen, who knows? But the point is, we're in this market where everything is spun. There's a narrative that is always turning something into a positive. Again, that's the environment we are in. And if we go to the markets, and let's take a look at the actual markets here, I want to take a look at the S&P 500. We could see that initially on the data, which again showed a little bit hotter inflation, we saw a spike down on the S&P futures and then a recovery, and we're now back up basically to the highs of the morning. Now, listen, markets are not up a lot. We're only up a little overall. If we look at where we closed yesterday here on the S&P futures, we're only slated to open up about 19 points higher or so on the S&P at the open in under 30 minutes. But the kicker is this, folks, is that normally if you had told me that these numbers would have come in more normalized than yesterday's PPI data, maybe even a little hot, you could have said, uh-oh, that means stagflation. Remember, stagflation is where the economy is weakening and inflation is creeping up. And by the way, that is what we are living in. So again, you guys out there, myself, we are in a stagflationary economy. Inflation continues to kind of inch up ever so slightly, and we're seeing the labor market and the economy slow. But the spin is being put on it that, hey, the more the weakness in the economy, inflation's not that big of a deal. I disagree. I think you and I, those of us that go to the store and buy food on a weekly basis, the grocery store might say it is a big deal. But the market is saying it's not a big deal. It's not hot enough yet. It's not rising fast enough to be a big deal. And instead, the weaker the numbers, the more likely the Fed can cut even more free money, cheap money, more debt, you name it. That's what the market is living on. It's like an entity. It's like a cancer. It's like a cancer living off of this kind of cheap money, free money system where eventually we know it's going to kill the patient, right? We all know that. I don't think there's anyone that disagrees that at some point down the road, you can kick the can down the road. But the question is how far, how long until the patient essentially dies. Right now, the markets are looking past it. And so we're still pushing up initially on this data. Now, I will point this out. What did we see yesterday on the S&P 500, folks, and on the NASDAQ? So if we go to the S&P, let's take a look. The S&P 500 yesterday opened higher on that CPI data and the Oracle earnings, and it faded all day long. Remember yesterday we talked about in My Trading Game Plan right here that I was looking and to see, since we had pretty big economic data and volume yesterday because of Oracle and the earnings, would we see institutions unloading? And the answer was yes. We saw it all day long. Here it was a little bit more dramatic on Friday of last week, but right here again, yesterday we saw it. Now, today the markets are getting lifted on light volume because remember, pre-market, generally you have light volume. Will we see that same sort of selling come in from institutions that look for any volume of significance to unload positions? All right, so now let's flip over to the daily chart. Now, the daily chart continues to be stuck in a wedge pattern, but this wedge pattern is tightening. Like a tightening box, it's squeezing price between it. The question is, which way do we break? We'll watch today. Remember, resistance will be the upper trend line here, which currently sits around 65, just under 65.90 on the S&P 500. And then the low end is around 64.90. And remember, both these numbers will move up because the trend lines are upsloping or ascending. Okay, so again, every day they're a little bit higher, both numbers, but those are your support and resistance levels. The NASDAQ yesterday closed flat. Now, again, this is something very unusual because, if you told me the day before, number one, that Oracle would be up intraday 42%, all right, and it would close up 35% on earnings, I literally would have said you are insane. All right, in fact, Oracle has the world record now for the biggest market cap company going up the most in one single day. All right, it holds that record now. There's never been a company over, let's say, 400 or even 300, maybe even 200 billion that has gone up 35% in one single day. Incredible. Incredible. I think the last record holder was NVIDIA a few years ago on earnings when it was up 25% at that time. And by the way, at that point, it was basically at the market cap that Oracle was at prior to this data, the earnings data. And remember, folks, let's call a spade. They missed on earnings. They missed on revenue, but the spin was magnificent. The forward guidance, 3-4 years out, things are going to be so good that ultimately, how do you not buy their stock, right? Well, listen, I guess time will tell if this forecast of theirs comes out in actual real dollars in revenue, right? Again, this is from a history of understanding when any company projects out during a hot period of technology, what you find again, and I said this yesterday, is that companies, if I'm a company and I need my AI chips or I need my AI infrastructure, I say to myself, listen, I'm going to book more than I need now, maybe double, maybe triple, because if I wait, I'll be in the line and I may not get my stuff for another year after that. And so let me overbook, and then I can always cancel some of those orders. And that's my guess of what's going to happen here, but time will tell, as it always does. All right. So QQQ, guys, again, we have resistance on the Qs up here, the support right down here. Remember, this is a beautiful kind of pseudo parallel. And again, I love parallels because it basically solidifies that you have the right trend lines that you're following. And again, you can see this high pivot going back to 2025 of February to the high here in August on the QQQ. And then right here, we have these lows connecting through the low points going back basically to the high in June all the way through the low in August, again in August, and here on September 2nd. All right, so watch this zone here. Now, the dollar today is starting to inch down just a little bit. Again, the idea that jobless claims are starting to dramatically spike. Now, again, I want to just mention this, folks, is that in the past few months, we have seen jobless claims briefly spike above 250. Now, they've come back down to like 230, 220, and so forth afterwards. And the market, for the most part, shrugged that off. For some reason, again, the narrative this time is like, wow, this must be real because we know the labor market is weakening. And it may be, but it's just interesting to see the difference, the way it's being treated. And this one is now, again, supplanting, almost like the market spinners are looking and saying, well, CPI wasn't low, so we can't utilize that to pump retail investors up to get them to continue to be exit liquidity on the market. So let's focus on the jobless claims number, which then we can spin and say, hey, the Fed may cut 50 basis points now to get those retail investors in. Again, I'm just throwing that out there, but I do think that is important to kind of think about. All right, so the dollar again, guys, continues to sit between support and resistance. I still think the dollar weakens and touches this trend line and even eventually breaks this trend line that goes back to 2008. And it is a big one, folks. If this were to break, that would be significant in terms of continued longer term weakening in the US dollar. Today, we may confirm below this trend line on the 10-year yield. The 10-year yield now is just fractionally above 4%. In fact, it briefly on the back of that news from jobless claims touched 3.996%. So again, if we confirm, it opens the door for us to head down to our next level. All right, our next level of support on the 10-year would be anywhere between 3.92 and 3.86. So right in this vicinity, you can see right there with this area, that would be your likely downside target on the 10-year yield. Now, the positive is this may actually, like if we see the long end start to come in, mortgage rates are going to fall. It may start to, galvanize a little bit on the home buying side. But the negative is if the economy is the culprit of the weakening, then people obviously are struggling if they're losing their jobs and they can't go out and buy houses, right? So again, it's a different maker here. But right now, we are in a deep freeze in the housing market, no doubt about it. And it's going to take quite a big drop in rates to kind of get people going. But the question is, does that drop in rates come with a recession, in which case it's going to be very hard for people to still buy homes? All right. Next up, we got to look at Oracle. So Oracle had that major pop yesterday, all the way up to the point where it touched 346. It then came all the way back into 320, then bounced back and closed around 328. Today, it's up about $5. If we go to the intraday chart, there was a trade that I took yesterday on Oracle with the live day trading room, and we made a nice chunk of change here. So again, the trade was to short it really right at the open. All right. And then look, it dumped all the way down to 312. I got out just below 315 for about a $5 and change gain. But again, it was really quick. Then it ripped up. Then it had this really nice intraday correction where it faded all day long as the markets faded, and then kind of got a little bit of maybe short covering into the end of the day. And then obviously overnight into today, it is gently floating to the upside. Now, today I wanted to look at Meta. Meta's an interesting one, guys, because again, it's needless to say trading extremely high. Like if we go to our monthly chart, look at this chart on Meta. Now, listen, this chart looks very similar to NVIDIA, to AVGO, to a lot of different charts. But what I was just noticing, and the reason I wanted to bring this up to your point, is to just keep an eye on a potential head and shoulders pattern. Now, it hasn't triggered yet, and it's still in the process of forming. But let's just monitor this pattern formation here. Is this forming a right shoulder, right? So again, is this forming a shoulder over here? And again, it's very early on. We don't know, but let's monitor it very closely, because if it does break, that would be a significant catalyst to downside on the Meta chart. Okay. And again, you can see neckline. Remember, head and shoulders only trigger if price closes below the neckline. In this case, the neckline is currently sitting around $732. And again, it's still trying to form that right shoulder. So we still just want to monitor. Basically, this isn't something you take as a trade yet off the head and shoulders, but you monitor it and put it on your watch list so that if it does form and it triggers, it's an easy hop on. It's already on the radar, essentially. And we always, and by the way, everyone always asks me, like, how do I have watch lists? Do I have scanners? Honestly, my eyes are my scanners. I don't really use scanners because number one, I focus on generally mid to large cap stocks. And so I limit it, but really, you're looking at the Metas, you're looking at the Microsofts, the Apples, et cetera, of these type of plays. And then I also focus for day trading on the bigger movers. Yesterday again on Oracle, huge move on Oracle yesterday. And so that was something that I was targeting for a day trade versus this on Meta would be more of a swing trade. All right, next up, Microsoft. And I'm going to go through just a bunch of these because we haven't looked at some of these in quite a while. Microsoft has really faded substantially. Looks like it's trading up just fractionally with the market. But again, the fade on Microsoft's been impressive. You got this big wide range red candle, and this is now an inside bar bear flag starting to form. So this would instill within me further downside. Where would first major support come in on this? The big support that I would actually be interested in looking for a long play on would be right around 467, because the former major pivot high in technical analysis, if price blasts through, when it comes back, that's basically a scene of the crime retrace, and that can be used as a buying opportunity. Apple had a big drop yesterday. And again, by the way, I mean, this was part of it, and I think this needs to be said, is that when Broadcom had those great earnings, NVIDIA was down the same day, right? And what we talked about was money flow. Money flow, again, markets are trying to find money. And, when you're having these trillion-dollar stocks going up 10, 15, 20, Oracle, almost $1 trillion stock going up 35%, you can't just be like, oh, mom and pops, they all each put in $100 and that's why it went. Like you're talking trillions of dollars here. And so the market is starting to find it hard to find new money. And so what's happening is you're seeing money rotation. And that's, by the way, that's also another sign that we're getting close to the end of a bull market, is when it's money rotation, not new money coming into the market that's propelling it up. And in this case, that was exactly what we saw. We saw Oracle up big yesterday, Broadcom, NVIDIA, basically anything AI related. But then what did we see? We saw Apple down. We saw Microsoft struggling. We saw Meta down on the day. And that really brought in the NASDAQ 100 to the point where the NASDAQ 100 closed flat on the day, even with NVIDIA up almost 4%. $4.5 trillion company up 4%. All right. Oracle, almost $1 trillion company in the 900 billion range now, was up 36%. And still the QQQ, flat, money rotation. That's the name of the game right now. And that's something that, again, you want to monitor. Okay. On Apple, guys, Apple has a little bit of support right in this 224 range. But the big thing for me now is monitoring some bigger trend lines, right? So what we're seeing here is potentially you have a trend line here, okay, right up here through the lows going back to January 2023 to April 9th, the liberation, or April 7th, the Liberation Day lows. And then we also now have a downsloping descending trend line here. Now, on a shorter term basis, the big first level is going to be at 215. And the reason why 215 is significant in technical analysis here, and I'm going to flip it to a different color, is because this was where it was banging on over and over again, and then it broke out. And so what would this be? This would be a retrace to the scene of the crime. So as a trader, and maybe even as a 1 or 2 day swing trade, I would be eyeing this 215 as a buy level on Apple if it comes in there in the next week or so. All right, Google, getting close to my target, guys. I have this monstrous parallel channel that goes back to 2021, connecting the major lows and the major highs. And look at where we are. Now, it hasn't hit it yet, so I haven't pulled the trigger on my swing trade short yet. But if we get up to about the 244 level, that is a fantastic opportunity at a swing short, just purely based on technical analysis. And then lastly, guys, quickly touching on Amazon. Amazon, again, still struggling to get back to its all-time highs. Big drop yesterday as, again, money was rotating, and that's the key. It's not that Amazon had bad news. It's not that Apple, you could always, the narratives will always spin it. But in general, what it was just money rotation. Money ran from some of these other mega caps into the new mega cap, Oracle / NVIDIA, which has been one of the older players as well. But one of the things I'm watching on Amazon here, there's a beautiful upsloping ascending trend line. As long as Amazon holds approximately 227, it's safe. If it breaks 227, watch out. That would be a big trend break on Amazon. All right, looking at gold, guys, we had the topping tail in gold 2 days ago. The classic retrace, which is almost always what you get once you get a topping tail. You get this little bit of buyers coming in, and then gold is coming down again today. Right now, it's holding this 3620 level. If it gets a daily close below 3620, it should go to 3580. All right, so I am still net bearish on gold based on the fact that the technical chart of the topping tail is the factor that rules right now until it's negated. All right, so again, just pure technical analysis. The topping tail is a bearish reversal signal. If it gets negated with a daily close above, okay, then it's negated. Until then, the bias is down. Silver, not doing anything. Wish I had more to update you guys on silver. It could be a bull flag, so that's a positive. But it is, again, disappointing that it's not making bigger moves. Bitcoin, Bitcoin yesterday closed above my pivot line. That's good. We talked about this, guys. Remember, if we go to the hourly chart, remember the inverse head and shoulders I've been talking to you guys about and how that chart setup was giving me the little bit of that bullish bias right here. There's your inverse head and shoulders. So again, as of now, that is holding up. And again, if we go back to the chart, if it continues to push, you're looking at 117 as your first target. But now the kicker is this, guys. You do not want to see it close back below this 112,500 zone. All right. So that again is my line in the sand. It hammered on it underneath 1, 2, 3, break above. Okay, that's great. Now, again, it fails if it closes back below 112,500. As long as it stays above, the bias now flips to bullish for a move to 117. All right. And then, of course, we can touch on ETH, guys. I know a lot of you guys love your ETH. ETH is still in a warning zone. It's not a breakdown. It's not a confirmed breakdown because it hasn't, again, confirmed below this trend line, which is amazing, by the way, that it's been below for this long and still hasn't confirmed. But it is still in the warning zone because it could confirm today. If it dropped enough, it would confirm. You basically, any close below approximately 42.40, and it would confirm. And then you're looking at 30, probably 3,900, high 38s in that vicinity. Now, if it can recapture the white trend line, it can start to make a move to the upside. All right, looking at oil real quick. It's been a little boring on the oil front lately with just a whole lot of chop. We're seeing that again. Again, 3 days up. Now we're selling off. Prior, we had 3 days down. So 3 days down, 3 days up. Now a down day. It's all in the same range on oil. Oil still hasn't hit my technical level, which is the gap fill at 60.65. And it certainly hasn't revisited the resistance around 66.50 either. And then natural gas, guys, taking a look at nat gas here. Nat gas, again, peaked above my key level. It never confirmed, and now it's back below. Amazing how the confirmation signal, it makes all the difference in the world, guys. All right, so today we're watching a couple things. We're watching, number one, we got this market that's trying to push up again, the spin saying, oh, these jobless claims, people filing for unemployment, that's a good thing because it's going to force the Fed to cut rates even more, right? That's the spin that's being put, even though people are generally, or the markets are ignoring CPI, which, to be honest, was a little bit on the hotter side, right? That one main number was 0.4 versus 0.3. The other core was 0.3 versus 0.3, but it was still in line or slightly hotter. But the key is I want to watch, like yesterday, we had the fade all day. Friday, we had the gap up and the heavy sell. On these bigger days where there's some volume, the markets tend to see institutional unloading. I want to watch to see if we see that today. After today, we're going to go into a quiet period waiting for the Fed next week. And so that's, again, going to be something we'll have to watch. All right. You guys have a great rest of your day. Thank you so much for tuning in and supporting us here at Verified Investing. Always try to give it to you straight. If I'm thinking it, I'm saying it right to you guys. Whatever I see in the charts comes right out to you guys. You guys have a great one. Thanks again. Take care.